Here we are with multiple time frame analysis. The first thing to talk about is symmetry and fractals. All right, fractals are patterns that repeat at different scales. They appear in many natural systems such as coastlines, rivers, and many plants, including ferns. So basically, when you're talking about the market, every change in behavior from an uptrend to a downtrend and back again is basically a form of a fractal. And during those major trends, you have the ebb and flow of the market. And of course, those also are fractals within that. Since the stock market is a system that arises from human behavior, fractals are part of its price history as well. And since human behavior is repetitive, fractals should help us to calculate the probabilities of future market moves. The chart, when you look at it with all the prices, human DNA, because it represented fear and greed in the markets, and the change in behavior often represented. So it's kind of interesting, a good way to look at it. All right, so let's jump into it. Well, first question I want to ask people is, when you look at this price structure on this chart, what time frame is it? Okay, can you tell me what time frame that is? It brings up an interesting question. If I can't tell what time frame it is, I could be looking at a 1 minute, and I would be looking at a longer term time frame. The point I'm going to be proving to you is that if you have a good trading system that works off price structure, it should work on all time frames and all markets. There are several systems out there where they'll tell you it's not for day trading, it's only for a certain market or a certain time frame. So when you hear that, right away you know they're not working off price structure. And price structure is really key in looking at multiple time frames and using the same software across multiple time frames. All right, so in that particular question, that was a stock and it was a daily chart. Well, what about this one? All right, any ideas what you think this might be? And the answer, of course, is no, because you can't tell without the X and Y axis. And that happened to be the S&P futures contract on a 2-minute time frame. How about this one? It's range bound, kind of. I could probably draw a pennant on there, but again, I can't tell you exactly what it is, and that happens to be crude oil on a daily chart. All right, here's another one. Nice Elliott wave 3, 4, going on a 5, and that's applied materials on a weekly chart. So the reason is that market symmetry is the same across all time frames and literally across all markets. The only time I would say you could probably tell the difference is if you had low liquidity on the very short time frames and it looked erratic, okay? That you sometimes can tell, but for the most part, you really can't. All right, so let's keep going on here. And the reason we use it is that it identifies different opportunities across different time frames. And when you get to a major area like this here on one time frame, you can actually look on another time frame or a lower time frame and see the actual price bars inside a movement like this to even better time your entry. So that's kind of an interesting way in which you can look at things. This is an example of multiple time frame analysis. So in a case like this, on this particular market here, we got the weekly chart over here, daily here, and just a 60-minute here. And you can see that on the weekly chart, we've drawn in some fibs. And on the daily chart, we're actually seeing a lot more structure inside this move. And one of the best structures here was to see this particular area hold here and then move off its bottom. So you had a situation here where the market tried to come down, took out the liquidity down here, and then reversed itself back to the upside. So in a case like that, that would be a prime entry, provided it looks like you've hit the fib retracement area on the weekly chart. So by using the weekly chart, you get a bigger overall picture, and then using the daily chart, you can really isolate your entries. And then what I do on the 60-minute chart too is I also look for momentum. I want to make sure momentum is moving up and we don't have a change in trend identifying a temporary correction. So that, and again, you can apply this on any time frame in any market. Here happens to be the MES. All right, same type of thing. So in the MES here, we've got a downtrend in place. We've got a little bit of a bottom here forming, okay, right there. And so any trend against this right now, you kind of got to be careful because we may not have the end of the trend in place. So you need to know that. Let me go to real charts for a moment, okay, and we can even take a look and see with the Nasdaq. What we do is we look at, in this case, different time frames here are based on the 5-minute, the 1-minute, and the 15-second. And so we're making our decisions based on these different time frames. And what's interesting here is we got a fair market value area here, and we took out liquidity once, but I'm very suspect. I want to make sure. I imagine we could take out that liquidity again. So I would wait. If we get above the fair value gap here, we close above here, then I would go long. Chances are we are not going down here. But until this move down is over, I want to see if they'll take out the liquidity here before they run it back up, things like that. Notice here we had a pull up in the ongoing downtrend with a bearish fair market value gap, and it got just on top of that, but did not take out the liquidity up here, okay? But it did take out the liquidity here, and then it came back down. So, you know, those, and look at the 5-minute, we had a major area here on the fair market value where it took it out with 2 pyramids to the downside. So that's indicating I want to be taking short trades down here until we get to a liquidity trap bottom, okay? So that's kind of where we're at this particular point. So that's how multiple time frame analysis can actually help you. And if you do it over multiple time frames, you get a bigger picture that you can have context with, and then you can isolate it into a smaller one. And this happens to be day trading stuff, but you know, you could do it also on the longer term stuff here too. So in a case like this, we got this particular market, and then we had a move off its bottom. And some of the indicators we use indicating that, you know, this move off the bottom should continue. We got 3 PTFs, which is the center indicator here, and that has a 75% probability of indicating more highs. So I kind of don't want to short here, right? I want to stay to the long side. So now my next job is to find the best entries for the long side. We had a pyramid here. We had a pullback here, stayed above the pyramid. And notice here, what was kind of interesting down here is that we took out liquidity here. So now it's ready to go. Our next liquidity area is here and then above here. So usually when you take out major liquidity, you're looking for an uptrend, you know, and you're in this area here. Wait until it takes out the liquidity and then look for a long trade. And this just worked out great. Took out the liquidity, bullish pyramid, boom. And so that's the kind of thing that you can use the multiple time frame to make sure you're in sync. And in this case, bullish coming off a bottom on the weekly. We got a nice liquidity taken out here. We got a nice pullback to put us back in. So that can be a very powerful signal right there. So definitely you want to look for confluence in all time frames. I also too want to put a link up here. I've got a lot more information on multiple time frame analysis in a course that we have, and I put that up there as well. So if you're interested in this topic and you want to review it in more in depth, that course is a great place to go. And we talk about how to set up your charts for different types of trading, whether you're position trading, intraday trading, and so forth. So it all depends on what you want to do and how much time you have to devote to it. If you are not a day trader and you just position trade and you have end of day trading, there's nothing wrong with that. Okay, you can have 2 charts up. You can still use it. You can have primarily the weekly and the daily chart side by side, just like that. And make sure that you're in alignment on the weekly and the daily. That's fine too. But all you have to do is create multiple charts and then link them. That's another thing I like to do is link the charts. Pretty basic stuff. You just link them, and then when you switch symbols, it'll switch all the charts you want to look at. All right, guys, that's it for now. Have a good one, all right? We'll see you back here next week. Thanks so much for coming. Good turnout.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.